came across this article claiming that Machine Games, the developer of Indiana Jones, somehow turned a 6% profit. Now, when outlets report on this stuff, a lot of times what they'll do is, because these companies will have like two different standards, okay? They'll have to do the international standard, like GAAP, or whatever the European version they use and the Asian version. And then they'll have their own internal accounting, which is just basically bullshit they're making up to make themselves look good. Like infamously, EA, like over a decade ago, claimed they were making a ton of money on their own accounting practices, but then when you apply GAAP, they were actually $200 million in the hole, which is why we have GAAP. And if you look at Netflix's accounting, they straight up admit that they're not counting billions of dollars on their balance sheet that they should be counting, but they don't do GAAP accounting on their balance sheet, so they don't have to count it. But in actuality, they're not turning profit. So what I do is I'll actually go to the financial statement just to make sure like there's not a GAAP section or whatever the international accounting standard is, and make sure this is actually what they're saying. Because a lot of times they're like, oh, it's profit, and you look at like their GAAP section, like no, they're not making a profit. And this statement here is insanely suspicious. But first, we can look at net sales, and if we take that and we convert it to dollars, we get this figure. And then when you take that figure and you divide it by $70, you get 633,210 copies sold. Well, it's 0.82 copies, so we can round that up or round that down, whatever you really want to do there. In other words, this game didn't sell 1 million copies. Now here's where this gets sus. So you have net sales that equal a major release every year, except for 2020, which actually makes a lot more sense. Like this here is probably what should be expanded all the way through here until 2024, where they actually had a major release. And we hop over here and we look at MachineGames' release schedule, and we can see that they released Young Blood in 2019, which we know flopped, and then re-released Quake and Quake 2 in 2021 and 2023. Those games did not sell gangbusters. And they had nothing to sell in 2022, so it doesn't even matter. So where are they getting these great sales in 2022? And then somehow they're always making more sales than their operating expenses, despite having a major AAA game in development for these 3 years. When you look at the cost of a game, like it's like, let's say $100 million to develop, that $100 million is then going to be broken up into like every year the game's developed. And it's going to scale based on how many more employees they have to hire or who's working on it. So it's not going to even be evenly distributed. Yet somehow with a AAA game in development and them having to increase their staffing, somehow, they're just having decreased expenditures. That's pretty sus. And then somehow they're always turning a profit. But then we get down here to their balance sheet and we look at their tangible fixed assets and their fixed assets and their cash in the bank. And then we look at their total current assets. This does not equal up to this, let alone total assets. Now, free equity is the amount of money you have access to. Equity is the total amount of value you have. So equity would likely include the building, their IPs, all that good jazz, their valuation. And the fact that they are claiming they almost have the same amount of free equity as equity is straight cap. It takes a while to liquidate assets and to sell them off, so there's no way they have that much free equity. And then on top of that, now if you look down here, you see their current liabilities. Somehow this company is making a profit, yet their debt's growing. You have a major release, and yet you increase your debt. You had profit, but you increase your debt. Whenever I see increased debt at the same time that you are claiming to turn a profit, red flags just go up. And then below that, you have total equity and liabilities. Now, to get this figure, you take your total assets and then you minus your total liabilities. Yet, every year, they are reporting their total assets as their total equity and liabilities every single year. Now, I can't allege full on accounting fraud, but something tells me if they were audited, they would fail their audit miserably. I don't believe their financial statements. I believe this income because it flat out shows the game was a commercial flop, but I don't believe their expenditures. I don't believe they have the income they're claiming to have. Especially when you release what's equivalent of 2 indie games, and yet you're claiming you have the same income as a AAA game, and then you have AAA income for basically a flop with no game release. And then this shoots up after 2020, and these figures should probably be closer to this figure. Now, maybe I'm wrong. I'm not a forensic accountant, but I know if I was running a business and someone was giving me this math, I'd be reaching out to a forensic accountant or just a regular accountant because I want an audit. I'd be highly skeptical because these numbers are just not adding up. Let me know what you think, though. And I'll see you in the next video. Peace out.